Welcome. This is our first episode of what we're going to term as questions, comments, and concerns. We're going to use the acronym QCC. So this is hopefully will be informational sessions of what questions are posed to us by our clients, and they might be market related, they might be legislation related, but something that could affect you. And we want to get out in front of you more often. So QCC, first episode. And Thomas, what we're going to talk a little bit about today are required minimum distributions. Tell us a little bit about that.
So yeah, required minimum distributions, or RMDs for short. What are they? They are required distributions that everyone is required to begin taking from their accounts, specifically their traditional IRAs and other pre-tax retirement accounts, once they hit a certain age.
Perfect. So let's talk. We talk about what it is. Let's talk about what, when, and how. So this Secure Act is starting to, the new Secure Act that was just passed is starting to bring RMDs into question. Tell us a little bit about the changes and when this is going to happen.
Yeah, so the Secure Act was a big sweeping piece of legislation that had a lot of facets to it. One of those facets had to do with RMDs, and it actually came out in two stages. Fun fact, though, if you look back to 1986 with the Tax Reform Act, that is when those RMDs were instituted, and they were instituted for age 70 and a half. But with the passage of the original Secure Act, which was dubbed 1.0 in 2019, that raised the age to 72. Secure Act 2.0, though, later down the road, passed last year, further graduated that age, increasing it to 73 for people that were born from 1951 to 1959, and 75 for those that were born in 1960 or later.
Okay, so we've got the what and the when, right? So how do clients then initiate these distributions? And frankly, maybe cover too, what do they do with those distributions? Can they even reinvest them?
Yeah, so one of the things that I don't want to skip over too much, I think, is that when they're required to begin taking them, it is essentially the year that they turn that age, and they have until the end of the year to take them. Now, that first year that they take them, they can delay it until April of the next year, but that would mean that you'd have to take two distributions in that following year. Generally, we don't recommend that because that means taking those two distributions in 1 year. So unless you have a specific tax situation or a specific tax strategy that you're trying to employ, we generally recommend taking it in that year that you turn that age. But in terms of reinvesting them, yeah, we have a lot of clients that they aren't drawing money out of their retirement accounts. They've done well, and they got their lifestyle to a point to where they're not having to draw money out. So generally, in those cases, we recommend that we open up, if they don't already have it, a taxable investment account, and we send that money, after they pay their taxes, of course, we send that money to that taxable investment account to be reinvested so that money continues to grow for them.
Perfect. So a lot of clients will even withhold taxes automatically. It'll come out. And the beauty of who we do business with, Fidelity and Schwab, our two custodians, is they can set these things up automatically, right? Too, they can do a monthly distribution, they can do quarterly, one time a year, where it's just set up automatically, and the custodians will actually then calculate how much the RMD will be, or you can do a regular distribution too, just depending on what your cash flow needs are at the time. So, look, we timely type situations in this respect with RMDs is something that we wanted to talk to our clients about. We will always be in front of kind of new legislation to try to contact our clients and let them know what we're thinking and questions that we're getting from our clients. So with questions, comments, concerns, obviously we would want you guys to call us. You can go to our website, avidianwealth.com. Reach out to myself, Thomas, or Taylor as well too. So I hope this is informative and one of many QCCs that we'll have.